I ask that you post your questions? There is a chat. Please post your questions. We will be able to respond to them towards the end of the webinar. So please ask. We've got a lot of wealth of experience and knowledge and skills that we can share on this panel. Thank you, ladies and gentlemen. So back to our panelists, and now take the opportunity to invite Ms. Patricia Kiwanuka, who Emily has expounded a lot on her experience around personal financial management, and I need not go back there, but Ms. Kiwanuka is obviously a powerhouse when it comes to simplifying financial jargon to really the simple mwananchi and just understand it in terms of personal financial management and investment. Without further ado, I do welcome Ms. Patricia Kiwanuka. Karibu.
Thank you, Mercy. Hopefully you can all hear me. This has been an interesting year for any one of us. So if you're like me in business and you're on this call, I'm sure you're happy to hear some positive is that there's opportunity for more hope in the environment. But one of the best things about being an entrepreneur or being in business is you also become very flexible about how you operate. And that's what I want to be discussing today as we start on personal financial management. On the next slide is really my story. You've heard where I've started. At 40, I left the corporate office and now I have been self-employed. It is quite an experience to be in a business field or entrepreneur during COVID times. I would never have envisaged that this could happen. And not only that, how quickly that you can adjust what is happening in your life. So for example, I'm speaking to you from home. I've had to move my office home and all my colleagues and associates are now working from home. And that is not something that we had envisaged. So I always tell people, and this is why I start with this slide, is whatever you're planning, always know that the change is certain. I can see someone saying they're losing me. Change is certain, employment will end and death will happen. And that's why for me, that period of time between the 60 and the end is really around what do I want to do with my life during those periods of time? What decisions do I take today around investments that will make my life better at that particular time? And moving forward, I want to introduce you to 3 of my clients, and I want you to have this conversation with me and be able to help them in their financial journey. The first one is Brian. Brian is actually a hotelier who got laid off during the pandemic. He's been out of work now almost 3 months. He got an attractive severance package and savings, and he went ahead and started a food business. Now, things are really slow. He's starting to wonder, one of his children has gone back to school. So he was really debating, should I borrow money or should I go talk to the school to spread when my payments are? Being a food delivery business, it's in the right line of business, but it is taking longer than he anticipated to introduce or to get the customer and the traction for his business. The second one I want to introduce is Mary. And Mary is frontline, she's a nurse. She's married with 2 kids who have been going to private school. Her husband is in business on the construction side of business. And I'm sure Mr. Gitonga will be talking about this area. And what has happened is the number of projects have become far and in between on her husband's side. And also, if you know from the government side, there's been a bit of delay around payment of some of the health worker allowances. So clearly there's pressure in the household for income. And she's starting to wonder, should we convert back our children from private school? Should we take them now back to government school? Should I homeschool? Should I start moving houses? And those are the kind of questions I want you to think about as we're talking. And finally, I want to introduce you to James. James is a lot more, when I say financially stable. He has been able to save for his 6 months cash flow. He's been very clear. However, he's just gotten a retrenchment notice. His last born is in school in the UK. He has significant debt, especially on his credit card. And he has been trying to target a retirement income of about 300,000. And what he has done to this extent is to try and buy properties. And now he has recently received an inheritance. The father passed away. They've been left with a business in the village, which is loss making. They have a family home which is worth about 20 million in land. They have 4 siblings and the mother is 85 and definitely needs to be taken care of. So as we're discussing the different investment agendas, those are the people I want you to keep in mind as we talk. So the first thing that you know is, on the next slide, is really, step one is really clarifying of those investment objectives. And that's why for the three characters I've given you, for Brian, it's very clear. You're a hotelier, you've started a business. What is his investment objective? I need to make an income, because he needs to be sustainable. And this is one of the biggest decisions you have to make for yourself, is why are you investing in something? Are you investing to get an income, or are you investing for growth? So let's use an example. If I buy land today in Roiro, am I investing for income or for growth? That is very simple. It's definitely not income generating, which means I'm investing for growth or for inflation protection. And this is where a lot of us tend to focus a lot of our energy in, tends to be on the growth or gain side. What COVID has done is really brought to the forefront the need for you to invest for an income. This income may not be a side hustle. If anything, for those of you who are employed, you will have realized very quickly that the employment income is not the most stable form of income you can have. You can depend on it, but you also need to start thinking, what more do I need? So for example, in the case of James, with this business that they have back at home, the first question will be, should we put more effort into the business so that it starts generating income that can support the mother? Or should we be selling out of the business if we don't know that business model? So it is very wrong to keep putting money into something that's not succeeding. On the next slide, I always tell people to start with the end in mind. It's very important that you define what your strategy looks like. In the case, for example, of Mary and her husband who's been in construction, when we did this pie chart for them, you could see almost 90% of their assets are within property or land. Now, property, which is rental income generating property or land. And you can imagine at the height of the pandemic, when there was conversations about rent not getting paid, that is clearly a lot of nervousness being created in the system. Because if what you're holding largely is rental income, and then your rent doesn't come on time, then there will be a challenge in how you rebalance. So for this was an example from one of the clients. You can see there they have land, they had cash in the bank, and they had some money market holdings coming to about 2.9 million shillings. Now you need to very clearly, what their intention is the pie chart, and what they're holding is different. So it's a very easy decision to make that says, try and move the cash in the bank into one of the other asset classes, because it's already above what your personal limit has been. Now, I will discuss the various asset classes shortly, and I'm sure we'll have a robust discussion around property in a few. As I move ahead, I want you to think about the third bit, which is really your investments that really should be about creating wealth. And this chart kind of says it very simply. For those of you who've read Rich Dad, Poor Dad, or Cash Flow Management, this is one that is not quite finance accounting right, but makes sense from an investment perspective. The first one is income. Anything for me that gives you an income, I consider an asset. And anything that gives you liability expenses, I consider a liability. So for example, my car, I love it, I don't refuse, and I like a good car. However, it's either insurance, or I'm servicing it, or it's breaking down. That is a liability, it's an expense. The house that I'm staying in, the family home, and this is one where people always debate. I'm staying in a house, I'm alone, and most of the rooms are not occupied. Is that really an asset? If you try to sell that property now, I think you'd have to jump through my mother and a lot of other people just to be able to convince her that this is an asset to be sold. So during COVID time, especially people who came into retirement during this period, they've really struggled with your family home, your family land. For example, in this case, I've talked about, what's his name, James, who had land from the inheritance. Your 4 siblings, will that land convert into an asset? And how do they start converting it into an asset? So for me, the success to creating wealth is you buy an asset, which gives you an income, and then you reinvest that income back into assets. So don't take income out and eat it. And that's one of the best examples of what COVID has done during this period. A lot of people discovered that a lot of their expenses are expenses they could actually forgo. So you'll find a lot of people have now readjusted their expenses. However, if I had had this conversation with you last year and said you could save up to 30% of your money, the answer was, it's impossible. But once salaries were cut by even 30%, families are still surviving. So it's a very big lesson for clients, as I'm talking and engaging with clients, is to say, deliberately keep that lifestyle where you're at. Even if your pay comes back up, even if your business income comes back up, try and navigate so that you have additional money to buy assets that you can use. And the whole idea about this chart is that you need to determine your net asset value. So in the case of Mary, for example, like I said, they are very wealthy. I call them poor millionaires. Why? They have the asset, they have the land, they have the property, but they do not have the income. And that is a very dangerous place to be. On the next slide, I'll talk very quickly around the different asset classes, touch on them quickly. You can see right there, and I always say this to people, risk and return. If you come to me and you say you want a very high return, you're also saying to me you're willing to take high risk. And now this is a very unique, I'm going to almost call it a peculiar Kenyan problem. People call you and say something like, what do you mean you're only paying 5%? And I'm sure for the banks, they hear this a lot. So you make noise about your deposit rate, which could be between 5 and might be 8%. And you want to take a higher return and earn 18%. But you forget, if you get a high return, you're also taking high risk. So always temper or balance your risk and return. And the second thing is always diversify. Don't have all your eggs in one basket. So for example, the first one that you have there is the Treasury Bill. A Treasury Bill or bond is a loan to the government. Right now, for 1 year Treasury Bill, I believe maybe Faith can confirm, it should be at about 8%. It's been coming down, but it means for that 1 year, your money is at the government, it will be safe. For you to buy a Treasury Bill or bond, you need between 50,000 to 100,000 to start, depending on which one you're buying. The process itself is very easy to get into in terms of purchases. The second one there is cash in the bank. If you're holding cash in the bank, try one, yes, there's the emergency fund that is liquid, but however, you also need to negotiate correctly to get adequate interest rates on your deposits. I do encourage people to keep cash in the bank, but more in fixed deposit form, because if it's cash, either on your mobile phone or in your current account, typically you will spend that money. So you want to try and tie in your money into deposit form. This is especially so for people who are getting retrenched, people who are getting inheritances, during the period before you have settled your mind on what to do emotionally. It's very important that you lock your money, whether it's for 6 months to a year, but lock that money away for a period of time to allow you to think through what your investments will be. And that's what I call the money market funds. They're usually lower risk, lower return, but at least you know there's safety of capital. From there, we've seen a number of corporate bonds, especially during this COVID season. There's been a lot of transaction advisors trying to raise corporate debt for some of their businesses. Again, remember, it is a debt. It is a loan to somebody and it needs to be paid back. So I've heard of interest as high as 18%. I think recently someone talked about a 20% debt. And like I said, the higher the rate of return, the higher the risk you're taking. So if you'd get into that investment, get into it with the knowledge that if you burn, then you should be happy with the interest that you made at the time. Equities and shares, we've seen a rebound in the stock market currently, both especially from the listed security side. But as always been the situation is you find a lot of us do not buy equities, and now the people who are buying are the foreigners. And then what will happen is as the markets get more and more expensive, then you as an individual will start to buy. So it's really the right time if you wanted to buy shares, it's really the right time to get into that market. And you will hear even from the exchange things around derivatives. Property market I won't focus a lot on, but the first thing that I tell anyone is property is about location, location, location. And then the second thing, which you tied earlier, is what is your objective with that property? What are you buying it for? If you're clear, you're buying it for rental income. I think in one of the cases, they were looking to put up hostels and they had started the project to start I think it was Mary's husband, to start a hostel project. Look at what has happened with universities now. The question becomes, is this really the right place to be? Should they put more money into that property? On the next slide, I talk about debt. No financial plan is complete without some form of borrowing. If you're going to try and accumulate money and not borrow, you'll find it very difficult to accumulate assets. So it is important that you you go and borrow money for the right reason. Do not borrow money to go on holidays. Do not borrow on your credit card. It's very expensive. If you're using a credit card, try and clear it. I actually tell people clear it immediately if you can. Separately, if you're buying to develop a business or real estate, that's a good plan. Anything in the middle there, which is really around student loans, mortgage loans, it really depends on how you structure it and how quickly you repay that amount. Now, this again is a slide that is very important during this time for people who are getting lump sums of money. Because a lot of times you get the lump sum and you want to go and put it directly into a project. You don't need to finance 100% of your development. You don't need to finance 100% of your business. There is room for you to be able to use debt for the right purpose. You can actually invest some of that cash somewhere else, diversify so that not all your money is stuck either in one project or one business all the time. And finally, on the last slide, kindly remember you must distribute your wealth. You can see there's a guy who wants to go home with his money, and the friends are thinking of giving him a check to go home with. It's very important that as you're planning, take time to do your will, take time to write. I've actually done my will, I've just updated my will, and I remember when I gave my lawyer, the first question they asked me is, but why, you're so young, why are you doing a will? And for me, a will is two things. One, it helps me keep track of where I'm actually at in terms of my assets. But more importantly, it also keeps me accountable, in this case to my mother, on what exactly my assets are doing. It's unbelievable when I meet couples together, how often they don't actually disclose to each other 100% of what they're holding. And to me, that's always a very interesting conversation, because I wonder what would happen if one died and you suddenly discovered your wife had a block of flats somewhere. I think it's a very traumatizing experience, or the other way around. So it's something for you to think about. Please put a will together. Tell us where your assets are in that will so that we can know where to start in terms of your inheritance. So at the end of the day, really on the next slide is, I hope through this process, you get to create wealth, but don't spend all your time chasing after money. The truth of the matter is, as an entrepreneur now, I can tell you for certain, your social network will equal your net worth. Once you're out of the formal office, once you're out from the titles, it's the people that you met during your period of working that will give you business. More importantly, take emotions out of decisions. Like you've seen from my clients, when I was asking the first client that we had, when we were discussing, and he's wondering, which was Brian, and he's wondering, do I go to the school and negotiate? One of the things that was very clear at the onset of COVID was, if you did not take the opportunity to negotiate with your bank, if you did not take opportunity to talk to the school, if you did not take opportunity to talk to your debtors because you were proud, it was the wrong call that you made. So at times, take pride out of that decision and the emotions, seek professional help, and you will find it's very easy for you to make a decision. So for example, I said I moved my office back home. That was not an easy decision at all. But because I had an independent person to talk to, it was very clear to them, why would you be paying rent when you can't even access the building? Do you really want the exposure? Do you want to keep your team at risk? So take the emotions out of your decisions and kindly take time to enjoy your life. Having said that, I'll stop there and hand over back to the team. My contacts will be there, and I'll be here to answer any questions you may have. Thank you very much.
Thank you very much, Patricia. That was indeed a very engaging and eye-opening discussion. I love the 3 steps that you have very well illustrated for us around defining, why you're investing, clarifying your objectives around investment, determining if you're investing for income or for growth, defining your long-term strategy, some really excellent nuggets that you have shared there with us. And I also loved the fact that you've talked about, getting the emotion out of your decisions when you're making that investment, because sometimes investments can be emotional, and, sometimes we take advice from our friends and, you're buying property because your friends are buying property, but not necessarily because you have a clarity around what it is that you want to do with the property. As you said, location is very important, and I love that we have an expert in property who's going to be speaking to that particular topic. So thank you very much for that very insightful conversation. We're looking forward to having further discussions, even as we get to the Q&A session. At this point, I'd like to just remind everyone on the call that you can place any questions that you have on the chat. There's a chat button at the bottom of the page, so you can place any questions that you have and we will be taking those questions and sharing them with the panelists for them to engage us as we go along. So thank you very much. And I would now like to invite Mr. Gikonyo. He is an expert in the property market, and he will be speaking to us around the journey towards property ownership and the outlook for this particular sector. Welcome, Mr. Gikonyo.
Thank you very much, Emily, and thank you very much to the team at Ncba for inviting me to speak today and give a bit of insights about investing in real estate and investing in property. Sometimes we will interchangeably call it real estate or property. I think it was really most appropriate that we first listened to Patricia Kiwanuka, and I'm so glad to be speaking after her. And we worked with Patricia before when she was at UAP, and so we've had some wonderful interaction. It's unfortunate we haven't met during the COVID time or for quite some time, but it's nice to have seen her online. I think just to pick it up from where Patricia has spoken, she has taken us through the issue about personal finance. And I think anyone who is looking at making an investment or looking at personal finance, it is important for them to, first of all, consult somebody like Patricia, who will take them through the PISO financial management aspects, which is all guided about what are your objectives, what are your goals as an individual in developing your personal finance management. What happens is that property is part of it because there are very many other investment management opportunities. Now, I think all of us have gone through a situation where you have got a job, you've just been employed, and after 3 months or 6 months of earning your salary, your parent calls you and asks you, have you bought a plot? So that's the first thing, you cannot a plot. So you start thinking, so your parents start saying, oh, you know, since you're now working, the first investment you have to make is buying a plot. And you start thinking, oh, why should I do that? But because it has been a historical investment proposition. I mean, when you go back to our parents who are in the 60s and 60s, when we were being born about in the 60s, maybe some of us in the 70s, those parents all believed in buying plots, and they bought plots and plots and plots and plots. Some of them have really worked out well because later on, these plots have really appreciated. But the investment decision for people now in our age or the younger group they've got different investment horizons with different goals and objectives. I think the first thing is to be able to understand, are you buying a plot because you want to build on it? Are you buying a plot because you want to have capital appreciation in it? A lot of people, the investment decision on buying real estate is guided by many things. And also a decision on whether to buy a house. I've heard quite a number of discussions with people who believe that home ownership is the first and most important thing. There are others who will argue home ownership is not a must. You can continue living in a rented house without taking a mortgage, because even if you wanted to live in a particular place, the rent you will pay might be much lesser than the mortgage you're going to be paying. But what happens is when you're looking at a property investment, there are certain factors we've got to look at. You've got to look at, as what Patricia said, location, location, location. The second thing you're going to look at a property is if it is not a developed property, if it is not for rental income, you're trying to think that property, what is the potential of it getting capital appreciation? So therefore, what you will then be able to look at is that when you're making that decision about where to invest, you look at factors that like, where's the location? What is the infrastructure to that place? What are the services that are being provided? Water, electricity, sewer. Is there a sewer in that place? Is the water reliable? How is the transportation to get to that place? I mean, people have different interests. There's some people who would like to live in Gong. A few years ago, Gong was a nightmare to live in. But now, with the opening of the dual carriageway up to Karen, and which will eventually go up to Gong, it's now going to be it's becoming now a very attractive place. Soon, we will have the train service, light train. Soon, there will be what is called the bus rapid transport. So certain areas are going to then really open up. I know people who went and invested in places like Sokimau. Getting to Sokimau, where there was no proper infrastructure, was a nightmare. People would get home maybe 10 o'clock and they had to leave by 5 o'clock. So when you're making those investment decisions, you have to think of what do you think is going to be the horizon in the future? Is there going to be infrastructure coming up? If you remember some years ago, Thika Road was not attractive. But the day they started developing the Thika Road, the Thika Superhighway, property prices along Thika Road just appreciated significantly. So when you're investing in real estate, in developed plots, those are the factors you have to look at. The other thing you also have to then consider is the title clean? Are you going to get a title deed? So some people have invested in property where they have gone and bought shares in land buying companies, and so the title has not yet been processed. So what happens is that you are not sure about the legality of that title. You're not sure whether that will not be a fake title or something. So what you have to do is to make sure that you have to always have to make sure that you're looking at how secure your title is for the future. So those are the factors that you're considering when you're buying land. As you have also seen, there has been a lot of advertising by media personalities. Every day you will see on TV, they're telling you buy a plot in Nakuru, buy a plot in Malindi. It is going to be only 300,000 or 250,000. And it can look very attractive for you to go and look at such places. But then you've got to start thinking about, okay, if you buy a plot in Malindi and your home is in Kisumu, so how often will you be going to Malindi to go and look at your plot? And what will it cost you to go to Malindi to look at your plot? You have to get on a plane from Malindi from Kisumu to Nairobi, then from Nairobi to Malindi, and then catch a matatu. And if it is during COVID times when we were locked down, you have to go by bus or public means. So it might take you 2 days. So is that investment really worth it? Who is looking after that investment? So I've dealt with that issue of buying what we call that caplot. Now, let's go into the investment of property. So the first thing is that you want to buy a house, a home for yourself. Decisions on buying a home is driven by various factors. There are these people who say, I don't want to continue paying rent. So because I don't want to continue paying rent, I must buy a house. Okay, fine. You will then go and buy a house. And maybe, let me give an example. You want to live in Karen. If you live in Karen, you go and buy a house for 65 million shillings. Just if you do the maths and see what that house will cost you, imagine you take a mortgage of even 50% and take maybe 30 million shillings loan to buy that house and pay 35 million cash. Your mortgage repayment will be mathematics, I think the guys will be in the region of 400,000 to 500,000. But if you rented that house, you could still live in that house for 200,000. So you start looking at it and saying, okay, maybe I'm better off just renting the house and not owning the house. So the investment decision is then decided, you make a decision. Do I go and buy this house for 65 million? Or do I go and buy a block of apartments where I'll be getting rental income? So those decisions, you need to sit down with a real estate advisor or financial consultant and start trying to look at those options. Investing in rental income is also quite challenging. You've got to make very serious decisions. For most of rental income investment, from my long experience, surprisingly, investing in the low income to the middle income gives you the better return. When you start renting houses, anything where you are getting a rental income between 5 to even maybe 20,000, maybe up to 50,000, maybe even up to 100,000, you're going to be okay. But also what happens is that when you start investing in the middle income areas or high to middle income, high income to the middle to high income areas, the risk, it becomes more risky because those people will be able, if things go bad, they will move or they will default. It is very common for some people who are in the middle to high income, they would rather pay their car loan than pay their house rent. And they will come back to you and say, oh, you know, I'm going through tough times. I need to, first of all, pay my car. I need to pay my children's school fees. So you can delay your rent. But the person who lives in the low income, low to middle income, the first thing he does is pays his rent. Then he thinks of the other things. So you'll find that investment in rental income, those are the much safer areas. When you start to invest, if you've got property that is in the high income areas, if a tenant moves out, it becomes much more difficult to get another tenant. But if you look at much lower income areas, the waiting period before you get a new tenant could be a month or not even a month. Many years ago, I lived in a place where it was where even before I left the house to my brother. So we went, I moved out and let my brother get in, and then we told the landlord later on. Because if we had not done that, the landlord would have given the house to somebody else. That's big demand. So investment in homes is driven by different things. It's driven by you trying to feel a sense of security. And I think during COVID, what has come out quite clearly is that people woke up one day and said, I could lose my job. I have lost my job. I have got 50% and my salary has been reduced. I'm such at risk where I am working that now I want to be living in my own house. So from my analysis of the real estate market so far, although some people think that the economy, as we say, the economy has contracted quite substantially, the purchase of land for people to develop their own homes has gone up, the demand. And there are some developers who have now, they can tell you that they're selling their lands they're doing very well on selling land. Secondly, what you will see that those people who had land they had bought before are now starting to construct. They're now developing their houses because they want to move out of their apartments. They want to move out of their houses in Eastlands, Kileleshwa, and whatever. They were in a rental house, and they've now decided, let's go and build our own house. Let's have a little garden. Let's have a place where we can be able to walk around. A place that we've got some fresh air. So that's what's happening, the demand. So you'll find that you'll see areas like Kileleshwa, Lavender, Kilimani, rentals have started falling. The apartments, you are now starting to see more vacancies. But if you go towards Ruiru, Juja, anywhere, Kitengela, Ngong, you will see that there is more and more construction work taking place. So that means that people are starting. So that is what is the sense of security that people want to have. The reason for other investing in property or for your own home is also a sense of, as I've said, a sense of satisfaction. It is also your peer pressure, friends, family. And there's also another one which I like. I've coined this word, and I know Patricia will understand, is that when people invest, they like calling something, they want to see whether there's a return on equity. I call it, there's also sometimes people invest in homes because they want to get a return on ego. So you want to show people that you have a home, yeah? And you want to invite people to your home. So different investment opportunity in decisions, again, will be determined by also what stage you're in your life, your age profile. People have different, the requirements. If you are 20s, if you're in your 20s, if you're in your 30s, if you're in your 50s, you'll have different goals and objectives, and you look at life differently, and you'll be able to make investment decisions differently. I think now with COVID, people have then realized that, well, I don't have to live in Nairobi. I can live on the suburbs. I can live in Thika. I can live in Kitengela. I can live in Isinya. Some people have even gone back. I've even said I can live up country. I can go to live in Murang'a, Nyeri, or whatever. So there's going to be different things, investment horizons. All I just recommend to anyone when you're thinking about investment, talk to a real estate advisor after you have spoken to a personal financial management expert. And then you will be able to determine the best investment you have to make. And also what is happening is you also have to undertake a proper due diligence on the titles that you are going to buy, on the property you're buying. Ensure that you have got good and secure title. Otherwise, it can be very painful for you to live in a property and then eventually find out that you don't have good title. You can see recently there was in the newspaper, some people bought some land, some houses in Sokimau. They paid the developer, but the developer did not pay the loan and now the properties are being auctioned. So you've got to be very careful and seek advice. Don't take shortcuts and say that I don't want to consult a lawyer, I don't want to consult a real estate advisor. So I think I would like to leave it there. I think maybe it will be more appropriate for me to respond and answer to the questions that are there, if there are any, and then we can take it from there. Thank you very much.
Thank you indeed. Thank you so much, Mr. Gikonyo. I believe a lot of our listeners, viewers, a lot of our customers have picked quite some learnings from what you have shared. The insights are real, what to invest in, what to look out for, the pitfalls, and the need for advisory advice, even as we go along the journey of either property ownership or looking for property to invest in. I also do love, and it's very profound, the ROE in this sense, not the economic term as we know, but return on ego. And I think there's a lot of that of us that we need to reflect on, especially as Kenyans, and ask what really motivates us as we get to seek for properties, as we get to look for where to live and all that. Is it our egos or is it an investment agenda? So thank you so much. Those were great insights. So for our viewers and listeners, please keep the questions coming in. The panelists are waiting to answer and respond to them. The first one, I'll start off. They're already coming in. I'll start off. This is directed to Patricia. So the question is, Patricia, with the current scenario of retrenchments and layoffs, what would you advise someone who has lost their job and is looking to start a business?
Okay, so the practical advice I'd give is first, whatever amount you've been given, if you can secure, I'd say 3 to 6 months of your expenses, that will give you peace of mind, because where you're coming from and the shock to the system of not going to work is major. So try and, you cut down your expenses to the basics and try and secure up to, say, 6 months. That will allow you the space to think. The second thing I'd say is do not put all that amount into a business. I know it's very tempting usually to start a big business idea. Allow your business to grow slowly, I think is the feedback I'd give. Is so take a small amount of capital, start the business, but the rest of that money, please get it fixed. Once you've done that initial payment of your expenses, if it's a bit of rent, make sure you can eat. I think put some money into the business, and then after that, please lock in that capital. There's something very, unfortunately, very strange about retrenchment money. If you start using it, it goes very, very quickly and leaves you with a lot of regret. So I'd almost be very deliberate in putting those 3 buckets in place.
Yeah, thanks, Patricia. I think our next question is directed to Faith on the economic side. This is from Kelvin. Kelvin is asking Faith, with the economy currently strained and suppressed, in terms of economic growth, what do we expect in the long term? Given that we are getting into a political cycle, is this a good time to invest in any sector, or is it a wait and see scenario? So Faith, please take it away.
All right, thank you, Kelvin. That's certainly a very good question. And indeed, with the uncertainty around election, everyone wants to sit back and wait. But also there are opportunities that comes with uncertainty. So depending on where you are at right now, and like Patricia mentioned at some point, since most people are not going into investment now, the demand is fairly low, so pricing tends to be a bit better. Everyone tends to wait out until it's all clear, but if you're looking to make a good return, then it makes sense to actually go in when everyone is afraid. Because you get better bargains, you get better pricing. So as much as, yes, everyone is taking a wait and see towards investment, it could actually be prudent you try and source for something that could give you a better bargain at this moment. The uncertainty, like I said, will persist. For Kenya, especially with the election cycle, and I think this is one of the most uncertain period we've had. You have BBI that's likely to define the whole succession politics and narrative. So until it's clear, I think there's going to be a lot of that wait and see. But from what we've learned historically, there's always a return. There's always a bounce back from these uncertainties. So try and take advantage of what we have now. We'll go back to investing. We'll go back to doing whatever we do after the politics is done. So don't sit out and lose out on what could be maybe most defining for you right now.
Okay. Thanks a lot, Faith, for that response. I hope we can resonate with a bouncing back scenario. Thank you so much. The next question is directed to Mr. Gikonyo. Mr. Gikonyo, there has been a question or debate around the property market bubble busting. Please shed some light around this.
Thank you very much. I will try and summarize this as it's a very big debate about the property market and whether it busts. I'd like to first of all put when people talk about the property bubble and it bursting, in countries like the US, it was the property bust was because there was people were getting so many loans it was very easy access to get loans, and the people went on a buying spree. So what happened is that once it caught up with them and people started defaulting, and that is where you then consider what is a property bust. But when you look at the property market in Kenya, the number of mortgages are fewer. I mean, you only have about, what, 26,000 mortgages in the country. It's estimated that 80% of those mortgages are actually people who work in the banking and financial sector. So most of the people who borrow to buy real estate actually borrow from their own, they actually buy these properties using either the cooperative loans, family savings, or whatever. So what has happened is that, let us not forget that the Kenya is got a very big, there's a young population, and our population is growing. So the only thing that people might think that when there is a price correction, where property prices are not going up as fast as they used to be, or going up as it is, they think that's a property bust. But it's not really a property, the bubble has not yet burst. It's really a question of property correction. However, you will, in the commercial property, there could be a downtown, because what is happening is that we are now starting to see fewer, that you've got properties, I mean, I do a lot of commercial leasing. And so what happens is that in the last 2 or 3 years, it's been the worst period to try and lease commercial properties. So we are struggling to lease out commercial properties because there was a bit of a large supply, but not enough demand. But when you look at residential, the residential market, only thing that's going to happen is that the property price appreciation that everyone thought was there is not growing as fast as it was. But if you still look at it, there's one property of which I have been quite involved in, which is Tatu City. A quarter of an acre in Tatu City in 2015 was going for 7 million shillings. It's now selling for 14 million shillings. That is only 5 years later. Just look at that capital appreciation. So that certainly means that there's no property bust there. And will it go down? No, it won't. Maybe the appreciation in the price might not be as a greater percentage as it was previously, but those properties will continue to appreciate. Kenya's population is 40 million. Our population increase is growing. We've got a young population. So there is definitely we're not going to see a depreciation in property prices. So that is, my view is the property is not, we're not going to see a bubble bust soon. Yeah.
Okay. Thank you, Mr. Gikonyo. I guess then the new term we need to start adopting is a price correction, right? Thank you. While at it, Mr. Gikonyo, this next question, I'll just direct it to you. It's very specific. A listener asks, I have property in Ongata Rongai near Kiserian. Should I keep it or should I sell it off? What is the potential for this area? It's a very specific question. Mr. Gikonyo, please take it away.
To answer that question about whether you should sell it or keep it is actually a very personal financial decision. And it's very difficult to have a general response to that question because you don't know what the needs of that person are, what his objectives are, and what is the personal financial objectives. I mean, if he really needs the cash now, he could sell it. If he doesn't need the cash now, the property will appreciate. If you start looking at Ongata Rongai and Keserian, just look at what the infrastructure that's going to be done. Very soon, there'll be a dual carriageway right up to, I think, the Magadi turnoff or something of the sort. So Ongata Rongai, Keserian, as a potential residential area, the demand is going to increase. Soon, there might be even a train to Ongata Rongai. There's already a train station in, I think, Rongai. So all the indications is that the property will appreciate. It will never depreciate. So that personal decision of whether to sell or buy or keep it really has to be determined by the individual's personal financial requirements. Yeah.
Hey.
Moderator, I've seen some questions on the Q&A. Are you going to come back to them or?
Yes.
Yes. Okay.
Yes, Mr. Gikonyo, we will. Thank you so much. I think that was a very specific question, and definitely, in my view, you've done it justice. The next question goes to Patricia. Patricia, a listener, asks, given the current economic uncertainty, what percentage, I guess, of the income should I put towards savings vis-a-vis expenses, vis-a-vis investments? Again, a very specific question. Patricia, please take it away.
So the rule of thumb by actuaries is you should be able to save up to 20% of the income if you want to have a relatively secure life in retirement. So usually we work with you to start figuring out, do we grow your number from 10% gradually to the 20%? But ideally up to about 20% of your income, and I'm talking of income net of taxes, should go into purchasing of investments or paying off of a mortgage or a loan to acquire an asset. So it has to be a deliberate amount that you build up to about 20%. Otherwise, it means you're eating too much of your money. So that would be the faster answer to that question.
Okay, thank you. I think that's loud and clear. This next question also goes to Patricia. Thank you for the informative presentation from a listener. Does investment to create income supersede investment for growth? Because the way I see it, income is what creates growth and not the other way around. What's your take?
I think just keep it simple would be the answer I'd give. Income for me is anything that gives me cash that I can actually tangibly hold. Growth is the capital gain conversation that Mr. Gikonyo was having. So I don't think there's an asset that supersedes another one. And that's why diversification is very, very key. You need to touch the different asset points or the different assets and diversify your risk so that you have both an income as well as a growth story. So the most extreme example I give usually is I have a client who had three properties, 2 in Karen and 1 in Runda where he stays. The tenant in Karen has moved out. His house in Runda is where he lives. So suddenly he's having a cash crisis. And yet from a valuation point of view, this person is actually a millionaire. So an income conversation is the same way you get a salary, is the same way I want to have an income either from rent or interest or one of those. But at the same time, because of inflation, I need to have growth or capital gain also factored into my portfolio. So I don't think the word either supersedes the other. It's really about where are you at and what is your target or what is your objective at that time. Thanks, Mercy.
Okay, thanks, Patricia. Next question, again, we are back to Mr. Gikonyo. Again, very specific. Please advise on allotment letter and certificates. I guess that speaks to land ownership when it comes to land purchase. Also, advice on mortgage or land purchase. I guess the question is, should I take a mortgage or should I buy cash? Mr. Gikonyo.
Thank you very much. When it comes to the letter of allotment, let me just explain to a lot of people what a letter of allotment. You can get what is called a letter of allotment from the government. And letters of allotments are very specific. It is allocated to a particular person. And you are then, the letter of allotment has terms and conditions. So it then states that you have to pay a stamp premium, you have to pay the survey fees, the land rent, and things like that. And once you do that, you then, the title deed will be processed. So previously, many years ago, a lot of people had letters of allotment. And I used to tell a lot of clients that if somebody comes to you with a letter of allotment and tries to sell you the letter of allotment, it's as worthless as the piece of paper it's written on. Because the letter of allotment was very specific to a particular person, and it had terms and conditions. And those conditions, if they were not met, the commissioner of lands had the right to revoke that letter of allotment. So if somebody comes to you and wants to sell you a property that's still under a letter of allotment, tell him to go and complete the whole process, get a title deed, and come back to you and try and sell you that property. Of course, if you want to take the risk, be ready for the consequences. So that's basically with regard to a letter of allotment. So what you will then do is that once you've seen that there is, you've got a title, then you are sure about the sanctity of that title. Don't forget that even previously, letters of allotment, sometimes some people had letters of allotment, you could have double allocation. So letter of allotment to the same property, but there were 3 or 4 letters of allotment. So if there is a title, you are sure there has been a survey and a title deed has been issued. So yeah, thank you. That's my response.
Yeah, thank you, Mr. Gikonyo. I guess that's pretty straightforward. Thank you. Next one, before you go, Mr. Gikonyo, what exactly is due diligence? Is there an exhaustive list to guide investors to ensure that they do the right thing in terms of due diligence?
I would say that there is not a clear exhaustive list that I can be able to advise somebody. All I would advise before you are acquiring a piece of land is contract a real estate advisor, and also make sure that you have a lawyer on your side, a lawyer that is acting on your behalf. So what happens is that when you're looking at a due diligence, and it depends on the type of property, and the level of due diligence might vary depending on the property you're buying. So first of all, if you're doing buying a property, you want to then check, was this originally public land? Now that can only be determined to you by somebody who has got a bit of experience as a real estate person. Maybe even the lawyer might not be able to find it, but he could be able to know whether it was. And usually what we have, most of us in our profession do, we look at what is called the Dungu report, the Dungu land report. However, not everything that was in the Dungu report will determine that it was public land. A person who is a surveyor or a person who is knowledgeable in land matters will be able to try and find out, is your land on a road reserve? Because even though you might have a title, if there was a road reserve determined, it might not appear in the title. And this is what happened to some people in Runda, and when you saw there was demolition for the bypasses. So what happened is that the government compulsory acquired the land for the roads, for the bypasses, and the original owners of those properties were meant to have surrendered the title deed to the government to then be issued with new titles, with that land being excised. So what they did, they didn't do that. Either maybe it was negligence on the part of the government, or it was fraud, whatever it was. So there were determined road reserves. The Northern Bypass was compulsory acquired in the 70s. It existed. If you look at the road between from Yaya going right up to James Gishuru Road, although those roads had not been built, the road reserves existed. The second thing you need to do is you also to try and look at whether it sits on riparian land. Now, an expert will be able to tell you all that. Other things you're looking at, when you're buying property is to see whether the building plans were approved by the county government, whether it's whichever it was. Does it have an NCA approval? Was there a NEMA license given for the development that you're buying into? So there are very many checks and balances that needs to be done. I strongly advise that anyone who is buying a property, especially when you're buying properties which are maybe off plan, or the importance of doing a due diligence is trying to find out who is the developer. So that is part of due diligence. Who is the developer? How has he performed before? Has he delivered before? What quality has he delivered before? Because all that is part of due diligence. And I always recommend that whenever you're buying a property and the developer or seller is telling you, you don't need to have your own lawyer, just use my lawyer, you would save on costs. Please avoid that. Make sure that you have your lawyer on your behalf, because that your lawyer is the one who will be acting on your behalf. So the due diligence checklist can be long, depending on the property, but it's always better to be safe than sorry. I hope I've answered that question, yeah.
Matthew,
Yes.
just add on to what Mr. Gikonyo has said.
Yes, Gladys.
Part of what the bank does for our customers is to ensure that we have a pre-vetted list of these professionals that can be able to help you with the due diligence when you're acquiring a property. I think it's very, very critical that due diligence is performed, that you have a lawyer representing your interest, that you have a valuer and a real estate expert also looking at the property that you intend to purchase, and that you actually ensure that you're buying a property that will not give you trouble later on. So it's part of as a bank we're able to do for our customer. Further, we are also in partnerships with various real estate developers who have a wide range of products ranging from plots to complete houses. So you can also look at what the bank has in store in terms of the variety of products and services. And also the same developers we've also done our due diligence on, and therefore we know for sure that these are reputable developers.
Okay. Thank you, Gladys. Indeed, I think it's very important that you've highlighted the bank's role in terms of just, they don't lose their money, basically. So thanks a lot. And Gladys, before you go off, I think there's a question for you here because it's directly, it's directed to Ncba. Please share with us briefly the investment and savings products that Ncba offers. A listener says, I've got some money on the side right now. What exactly do I do with it in terms of the products and solutions you offer as Ncba?
Okay, thank you so much, Mercy, for that question. And thank you to our viewer who has posted that question. Ncba has a variety of products and services to get you off onto your financial journey. I would always recommend that when you start a relationship with the bank, you start off with the basic account, which is the transactional account, which will be your current account. What this does for you is it enables you to receive funds before you then decide what you want to do. So it's an important account to have because it will enable you to transact on a day-to-day basis, but it is also the center through which you are able to receive funds, be those be from your business or from your salary if you're employed. In terms of the investment products that we have, we start off with the basic savings account. This is an interest earning account. If you have funds that you don't have immediate use for, you can put that in a savings account. If you require a higher return, and back to what Patricia talked about, it is always advisable for you to look at putting your money either in a fixed deposit for a predetermined period of time, say 1 to 12 months, Or if you already know what you want to do with your funds, you could put it on call, which enables you to call up on the fund whenever you're ready to use the funds. But we also do have other varieties of investment vehicles. We have the collective investment vehicle. We call them unit trust funds. So the unit trust funds comes in two parts. So we have a fund that invests in money market instruments. That is, mostly they would invest in bank deposits. They also invest in treasury bills and bonds. So it's a blended fund. It will give you a higher return than the deposit account. And it also, as I said, because it's blended, the returns will also vary from time to time. Then we also have, for the people that want to buy stocks, we have the equity funds, which also we look at investing in different stocks to give you a good return. All these stocks, we've already done our due diligence on. They are growth stocks and stable stocks. So the people that do not want to go directly into the stock market to buy stocks can also be able to invest in that. If you are then a savvy stock investor, we have our stock brokerage. Of course, this is managed and run by professionals. If you feel that you want to have a say in what stocks to buy, you can come and see us. We have a stock brokerage arm and see one of the investors there. So based on your circumstances, you can start off by saving in a savings account. Then as you build up your savings, you can move that to your deposits. There are also investments in government treasury bills and bonds. As Patricia said, those are also available. You can invest through us, or you can invest directly by opening an account at Central Bank of Kenya. We also have relationship teams. So really, if you feel that you need to have further discussion with the bank on how you can invest your funds, please feel free to call us, to walk into any of our branch, and we'll be able to assist you with your investment options. Thanks, Mercy.
Thanks a lot, Gladys. We have learned a lot also in terms of what Ncba has to offer. To our viewers and listeners, please keep the questions coming in. Those that we will not be able to respond to for this session, we will for sure come back to you with the responses. We are coming to the tail end of our webinar, and it's been quite an insightful conversation. I'll get back to the panelists right now and just request them for closing remarks. Should we start off with Faith? Faith, please share with us your closing final remarks. Parting shot, please. Thank you.
All right. Thank you, Mercy, and fellow panelists. I've learned a lot personally. You never have enough of this information. There's always something new you learn, even if it's just a reminder of what you're not doing right. So thank you, Patricia and Gikonyo. The conversation on real estate was quite enlightening for me. For the viewers, I think my parting shot will be quite simple. As much as we face a lot of uncertainty, there's still a lot of hope in it. When from an economic point, we always have cycles. We have our trenches, and then we have when things pick up. We are at a bad.
Faith, I think you are muted. Kindly unmute.
I'm so sorry. Oh, sorry. Thank you. I think I accidentally muted myself. I don't know which part you missed. Should just start over. But I was saying, I've learned a lot in person, especially on the real estate conversation. Quite some good reminders on personal finance management from Patricia. We appreciate that. But for the general audience, I'd just like to say, economically, we normally have cycles. We have troughs, then we have peaks. Where we are at now, it would seem that this is so far the worst, and it can only go better. We can only go higher. So stay optimistic, take advantage of the bargains we have right now. Like Mr. Gikonyo said, yes, prices are still fairly attractive right now. There's a lot of room for appreciation. As Patricia said, for the stock exchange, you can buy now and sell to those who are waiting for things to get better when they come back to buy at that point in time. So yeah, there's a flicker of hope. There's a silver lining. Things will certainly get better. It might take longer than we wish, but we certainly should see better days. Thank you.
Thank you, Faith. Final remarks, Mr. Gikonyo?
Yes, thank you very much for this opportunity. I'll just like to give me a chance to just respond to one question that somebody had asked. Is that he had asked, we have issues on riparian government public land upon purchase of land after due diligence. Advise on how we can go about this. All I can just try and say is that if there was proper due diligence, there would not have been an issue of discovering whether that was government or public land. So unfortunately, if you've discovered that it was government or riparian land after purchase, that just points out that there was no proper due diligence, or the person who undertook the due diligence for you did not undertake a thorough due diligence, or maybe could have been compromised or was not very thorough in the due diligence. That's my comment on that. Investing, my parting shot is investing in real estate and property is a personal decision, and it is, the circumstances will vary from each individual to each individual. So I would just advise you, a solution that suits you might not suit somebody else. So you have to look at your own individual perspective and make that decision. All I can be able to say is that there's some general investment tips that you can go through. And that's what I would just urge everyone to listen, to take those general investment tips and then make decisions on how to invest in real estate. People have different preferences, they consider different options, and there is no one size fits all. Everyone has different, and this all will be determined about your objectives. And now I keep on saying personal preferences. I remember that when I was a young man, buying a car was so important. I always wanted to own a car. But nowadays I look at my 27-year-old son and he tells me he is not buying a car any day soon. He's quite happy using Uber and he lives comfortably. He works from home. So he doesn't need, he's not gonna sit looking at a car in the garage for worth 2.5 million shillings or 2 million shillings, even 500,000. So different people have different perspectives. So all I will just tell you, urge is that whenever you're going to make investments, consult an expert who will give you options. Maybe consulting a friend can help, but also don't forget that the friend might be wanting to, his preferences might not be your preferences. So that's my parting shot. Thank you very much. And thank you very much, Ncba, for inviting me to be on this webinar.
Thank you, Mr. Gikonyo. Always a pleasure to partner with you. The closing remarks next will go to Patricia. Patricia, what are your final thoughts?
So first, thank you so much for the questions and the interaction on this. I think my final thoughts are, COVID has certainly told us that uncertainty also creates opportunities for us. So wherever you're sitting, whatever that opportunity is, whether it's your salary got reduced, it means you know you have the ability to save more. If you've just gotten retrenched or suddenly inherited money, there's an opportunity. Yes, you can go into business, but there's definitely an opportunity for you to pause until you have a clear perspective. So my parting shot is, please be very deliberate about your investments, seek professional help, and please understand your overall reason for making certain purchases. Don't just invest because it's a new fad, and don't chase after return. If you have a balanced portfolio, it will work out in the long run. So that would be my parting thought, and thank you so much for everyone on this webinar.
Thank you, Patricia, and again, great pleasure to always partner with you in these conversations. Quite insightful. I'll go to Gladys, our Director, Consumer Banking. Gladys, kindly share with us your closing remarks.
Thank you, Mercy. Thank you, Gikonyo, Patricia, and Faith. This has been a very insightful session. And thank you also to the customers and the people that have logged into this webinar this morning. I think for me, my parting shot, and I'll just repeat what the panelists have said. Please seek professional advice before you make your investment decisions. I think it's very, very important. We have listened to both Gikonyo and Patricia, and they have a wealth of experience. I am a believer in experience because we learn a lot from experience, both our own personal experience and other people's experiences. But in the investment journey and in your financial journey, it's prudent to seek professional help. Ncba is part of the people you need to speak to, whether you want to make an investment, whether you need financial support. So we are here to enable you meet your financial objectives. We'll work with you throughout that journey. Thank you, Mercy.
Thank you, Gladys, and thank you to our viewers. So viewers and listeners, we've come to the tail end of our webinar. The conversation has been quite insightful today. We've had a lot from what's happening in the economy, how we can make better decisions on the property side, whether to invest or own a home, what it is Ncba has been doing and continues to do to support our customers both during these tough times and the days ahead, because like Faith did say, there is indeed light at the end of the tunnel. We are really looking for brighter days ahead, and we want as Ncba to be the expert advisors, the trusted advisors, to be close to you. Gladys has mentioned that we have relationship teams across the branch network. Some indeed are logged into this webinar. Please reach out to them in case you need further advice, in case you have more questions. We will be more pleased, very happy to respond to you and work with you on whatever financial decision or investment decision you would like to make, whether now or in the future. We believe in growth planning for our customers. So thank you, viewers. We feel very honored for you to log into this webinar, sparing your time to be with us. Thank you so much, the experts that we do have, the panelists, like Gladys again has said, quite a wealth of experience. I personally had the opportunity to listen to them over and over again. And to Faith's point, I always learn something new. So thank you, Mr. Gikonyo. Thank you, Patricia. Indeed, it's a pleasure to always partner with you. Thank you, Faith, again, for being here as a colleague and just paint the picture from an economic perspective. So, ladies and gentlemen, just again as a reminder, we are here to support you. We're here to work with you. You can reach out to us through our RMs, through our branch network, through the customer service numbers for any investment or financial management advisory needs. We have come to the end of our webinar, and I wish you all a great, great day. Thank you.
Thank you, Mercy.